This next lecture, we're going to be focusing on one of the unique features of Canada Pension Plan. A lot of people think of Canadian Pension Plan strictly as for retirement purposes, at age 65, things of that nature. They don't realize that in actual fact there are some other unique features. Today we're going to focus our attention on the disability part of the Canada Pension Plan. First thing we must stress to you is that it is a contributory plan. In other words, if you do not, in fact, contribute to CPP, this will not apply to you. So people who are living at home or unemployed, or in other words, or they just simply raise their children, whatever the case may be. In other words, they're not actually gainfully employed and therefore not contributing to Canada Pension Plan, need not apply because you will not be able to get this benefit whatsoever. The contribution, there is in another lecture we'll be talking about the amount of contribution, but at this point they emphasize that there is a contribution level that must be met and a minimum amount of money that must be paid before, in actual fact, you can take advantage of this particular benefit. Okay. The other thing you have to remember is that the contribution that you're making is, of course, a deductible expense. Okay. So if any of you who have ever filed your T1, you'll notice that your CPP that shows up on your T4, you can in fact deduct that from your taxable income. So therefore, the contribution is the deductible expense. Because it's a deductible expense, then of course the benefit that you're going to get is a taxable benefit. So if you are entitled to, let's say, $1,000 a month of disability benefit, that $1,000 will be considered taxable income. So the moment you make a contribution because you deducted it, then obviously then you're going to have to pay tax on it when in actual fact the benefits is paid out to you. So please make sure that you recognize that those two go hand in hand. Probably the most important component of the CPP disability is the actual definition of disability. So unlike most definitions, okay, this is very, very specific, okay? It's very serious situation where it very basically says that the definition of disability is that it has to be so severe and so prolonged. In other words, you really haven't got much of a hope of actually ever recovering from this. So it's a severe and prolonged condition. If that qualifies, if that definition is met, then you will qualify for the actual benefit itself. If it's any situation where you may in fact recover over a short period of time, likelihood is you're not going to be able to get this coverage. Okay, so therefore, please make sure that you look at the definition because it is quite different than your conventional disability definition. The next thing we have to take a look at, okay, is when can you actually apply for CPP? In other words, what is the waiting period? The waiting period, again, is very fixed. It's fixed to 4 months. In other words, it can change this. It's not 30 days. You have no choice. It is, you have to wait for a period of 4 months. At the end of the 4 months, you're still disabled, then they will basically start to pay you, let's say, $1,000 a month, which again is taxable. How long does the benefit go for? In other words, how long am I covered for? You will be covered to age 65. Remember that you're contributing CPP from the time you're age 18 all the way to age 65. So therefore, anytime you become disabled in between all that, and you do qualify under the definition, you will in fact get paid up to age 65. At age 65, of course, your normal pension plan kicks in. So this benefit period is to age 65. So once again, I stress to you that all these benefits are all fully taxable, and you do have to qualify under a fairly restrictive definition. The last thing to mention in regards to this particular plan is that there is also a disability benefit for your children. So if you have children that are younger than 18. Okay, obviously dependents, younger than 18, they will in fact get a monthly income as well. So along with you, they will actually get an income as well. And if your child is between age 18 and 25 and still going to school, they will also qualify for the disability pension as well. But I stress again, it has to be that they are full-time at school. If they're working and they're over 18, they do not qualify for this. And once again, that benefit is also taxable. So this is a very restricted definition, a very restricted product, but nonetheless, it is part of your Canada Pension Plan contributions.